Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about Microsoft. And Microsoft basically missed expectations on Wall Street. Their earnings were okay. I think their revenue missed though. And basically, man, Microsoft has become this, this boring company that doesn't do anything. They don't have a compelling product offering coming to the market anytime soon. They just lack any creativity over there. And this might sound offensive to a Microsoft engineer who might run across my video one of these days, but it's the truth. You guys are boring. You guys suck. You guys are a great company. I mean, in terms of being able to secure a foothold, gradually grow, protect your licenses and everything. You guys have a great operating model. But you're not doing anything to take yourself to the next step. You're not a $60 company anytime soon. You're not a $70 per share Microsoft anytime soon. Nobody's expecting that from you guys, and you guys have to do something. So the way I see it, Microsoft, it's a very secure company, believe it or not. It's one of those blue chip technology companies. You could hold on to it for 10 years and you'd be collecting the dividends. You'd treat it like a treasury bond rather than an actual company. That's fine. I mean, but it's not surprising at all that Microsoft wasn't able to improve their revenue by much, because what could you expect? This company isn't that good. It hasn't done a very good job of producing equity over the past 10 years. So the way I see it personally, I mean, if you guys are long-term investors, you guys want exposure to technology, but you don't want the volatility associated with it, Microsoft all the way. Now, if you want to make a lot of money from technology, Microsoft shouldn't even be on your list. It shouldn't. You might as well just cross it off right now. And the miss in revenues is kind of bad, and I think that it's going to pull back for a couple more weeks, and it might actually fall down to that trend line right there. So that trend line area is kind of where you would kind of buy it for. I guess that would be where you would want to buy as your average in. You might want to look for a specific area on the chart, and 28.75 seems pretty reasonable. It might bounce off that area, then might come back into its narrow range of around $20, $26, $27 to around $33. Trades in around a 20% range, and it takes around 6 to 12 months for it to get back and forth between those major ranges. I like Microsoft when it's on the cheaper end of the range, and right now it's at the mid end of the range. But I mean, at this point, at this area right here, it could be due for a decent bounce at around 28.75. But when it gets near $25, $26 per share, that's when I would totally jump onto the Microsoft train. Not because they're going to do a good job, not because I expect them to make some new groundbreaking product that's going to make everybody go ooh ah, but basically because it's cheap enough for Wall Street to bid it back up to its upper range, and then Wall Street will end up selling it again, and then they're going to end up buying it at the bottom end of its range again, so which is going to be at around $26 per share. So, I would average in as it continues to fall, and then I start selling it once it gets above 28.75 again. Or that's a much longer trend. We're talking 6 to 12 months for that type of trade. But for right now, I think that it's going to pull back. I think it's going to go down to this trend line. And for anybody holding on to Microsoft, this is just another typical Microsoft announcement where they miss revenues, because we weren't expecting that, right? Wall Street. Anyway, see you guys later. I hope you guys make money every single day of the year, and I'll talk to you guys again some other day.